All right, so I'm going to show you what I think is going on in the precious metals. So first off, this intermediate decline lasted a lot longer than what I was initially expecting. When the Vanguard Fund decided to close out their precious metals mutual fund, it just kind of opened the door for the shorts to just keep pressure on the metals for as long as it would take for that fund to liquidate their positions. Just made this intermediate decline last a lot longer and was much more difficult than what I initially anticipated. And then once we did get our bottom, then we've had a very frustrating back and forth 7 weeks of basing. And most of the bears during this time were anticipating another breakdown below this August low, which you'd have to admit that that was a possibility, but probably not a very strong possibility. My feeling was always that we would break to the upside out of this basing pattern and not lower, and that the traders that had been conditioned to expect price to go down would get caught at this bottom. They would get caught short, and then they would take a big loss as we broke up out of this consolidation, out of this basing pattern, and that's exactly what happened. Gold was never destined to go down to 1,050. As I've said before, I think that was a generational low in the CRB back in 2016, late 2015 for gold. Oil was at $26 a barrel. I don't think we're going to see those prices ever again. And so, the odds are just not good that gold is ever going to see 1,050 again. That was a generational low in the CRB. I also think it's a generational low in gold. All right, so moving on to the mining stocks. It's my opinion that all of the people that were so happy to tell me I was wrong as we moved down into this intermediate cycle low, all the people that became frustrated, we had to make a lot of trades during this decline. As I said, first off, I didn't know that Vanguard was going to liquidate that fund in advance, and so I was not anticipating such a long and sustained move lower. So we had a lot of false starts, trying to pick the bottom, having to stop out quickly. Sometimes we stop out with a small loss, sometimes we make a small gain. By the time we got to this bottom here, we were basically at break even. We hadn't made any sustainable gains or suffered any sustainable losses. We were just basically at the same point here as we were when we started up here. Now, what I think is going to happen is we're going to get the next leg up in this bull market that started back here in 2015. I think this decline has conditioned almost everyone to, if not expect gold and metals mining stocks to just go down indefinitely. Like I said, most of the bears that had been conditioned to expect only lower prices here have already gotten caught by that move last week, and they've already given back a big chunk, if not all, of their gains that they made on the short side. But I think this is going to go much further than what anybody is anticipating. This intermediate cycle low has trained people to trade quickly. If they have a profit, it's trained them to take it very quickly, get back on the sidelines, get short, whatever. But as I've said before, markets evolve, in market environments change. What works in one environment usually will not work in another. And I think the quick in and out trading is that strategy is coming to an end. I think that strategy is going to now cost traders money. So I believe I've shown this before. We've got a volatility coil that formed. This is on the monthly chart that formed in April, May, and June. And you can see here price just got stuck in a very tight range. And generally, the breakout from a coil tends to be pretty violent, but the initial breakout from a coil also usually tends to be a false move. So the majority of the time, 70-75% of the time, the initial break, which in this case was down, even though it looks very convincing, it will be a false move that will run out of energy very quickly, and then price will reverse, and you'll get a much more sustainable, durable, and more powerful move in the opposite direction. And so you can see here on the monthly chart, I think I noted this last month when we had this potential bottoming candle, that I said I thought October was going to be a much better month for the metals, and we do. We have already, still not even halfway through the month yet. We've got a weekly swing on the monthly level, and I think over the next 3, 4, 5 months, we're going to have a big trending move in the miners. I certainly think we're going to come back up. We're going to recover this coil consolidation zone, and that's a big clue that the coil is playing out as expected. If the initial break doesn't produce sustained follow through, and if price comes back to retest or regain the coil consolidation zone, that's a big clue that we've got the standard coil reversal, and traders need to be prepared for a very powerful move out of the coil, this time in the upwards direction, and this move should be a much more sustainable and durable than this initial break to the downside. So I'm going to say over the next 3 to 5 months, we're easily going to recover this level. I think we're going to recover this upper consolidation level at 25, and I suspect we're probably going to retest the baby bull high. And almost no one is expecting this. They've just gotten conditioned to expect only lower prices as we move down into this intermediate cycle low here. And it's going to take many weeks or months to break that mindset. But as of right now, everything is setting up to tell me that we've got a coil pattern here that broke to the downside and is now reversing just like we would expect a coil to do, and we're going to get a very powerful and much more durable move in the opposite direction.